Hello, everyone, and welcome to TradeFinder Live. It's great to be back with you all during this trading day and during trading hours. My name is Zach. Most of you are likely familiar with me by now, but if you're new or joining us for the first time, welcome. It's great to have you with us. First and foremost, we have to cover off our disclosure disclaimer agreement. If you've attended any of our live sessions or events previously, then you've seen this. The main thing to take away from it is that we are not licensed investment advisors in the United States, so nothing is to be taken as personal investment advice. Feel free to take a screenshot of it if you like, but that's the main point to take away. Always available on our website to be read in full detail there. Market's trying to bounce from yesterday's sell-off, and let's see what Rob has to say with this DeepSeek recovery and the more news around that. So, Rob, you out there?
I am, Zach. How are you? Happy Tuesday to you. Happy Tuesday, everybody. Welcome to this week's TradeFinder Live. Yep, as you mentioned, the market is trying to bounce back from, I guess, the world about to come to an end in the U.S. version of AI with the DeepSeek thing. And now everything's starting to get put a little bit more into focus as far as they're still using chips and how much data have they borrowed from us, et cetera. But there was this fear that perhaps the AI was losing the initial position as far as leading in the AI space, and created a big move to the downside yesterday. And the question coming into today would be, is there going to be follow through to the downside? Was that just an excuse to sell, which it seems to be at this point? Because if you take a look at the chart, you can see that we're having a pretty good day today with this big bounce back to the upside. And that's a little bit more than a potential dead cat bounce, where you sometimes have a big, massive sell-off, and then you bounce back just a little bit following that. This seems to be more than that. The issue that we have are gaps everywhere, right? That's what brings the question into mind as far as where do we go from here. So I've broadened the chart. And by the way, if you haven't gone to hub.com and gotten a copy of the software, what are you waiting for? It's a great piece of software. You get free Elliott Wave, free live Elliott Wave. We'll look at the live intraday chart here in just a moment. But I did want to go through in detail what I'm talking about as far as the gaps. So way back here in the middle of January, we had this gap up, and then we had a couple gaps and moved up. In yesterday's move, we broke down here. Now, the issue with that, and if you're not familiar with gaps, is it doesn't count as filling that gap. You can say, well, we traded way below it. But when they're talking about filling gaps, they're talking about actual pricing, the part of the bar that fills the gap. So when you gap back down, it could be an island reversal. In other words, we had this gap up right here, and then we had the gap down yesterday. So we have these three bars just floating on their own. Yesterday, it looked like that could possibly be what's known as an island reversal. And they call it that because that leaves these three bars just kind of floating out on their own on an island. But with the veracity of the bounce today, more than just a little bit of a dead cat bounce, I think. You can see we just ticked up again. It seems like we're going to go up and fill this gap. Now the question becomes, is that it? Did we just have this big move down? Or are we just having an extreme bounce and we're still destined to come down and fill this gap? I do think we'll fill it at some point in time, but maybe not on this move. So another thing that I wanted to show you, we shared with our subscriber at Evo Trader Live yesterday, is the potential for a new zigzag. So you can see right here, I've drawn it where we had this move up from the 4 to the 5, could be an A wave. In other words, we would be having a complex wave 5. So we had the B wave correction right at 46%, and that gives us a potential extension on the 100% all the way up to 630 if we were to go that far. And since we're awfully close to 50%, you would think that you would follow that rule. Remember, a 38.2% B wave correction only yields a 61.8% extension, but a 50% correction normally gives you a 100% extension. So what we can say is that if we continue higher in this move, we're likely to move somewhere between 615 and 630 on the S&P. We're not there yet. Everything needs a follow-through day, but notice that we did finish on the high of the day yesterday, not on the low. So I think that was kind of telling that we'd probably get some sort of a bounce today. I'm not sure anyone, including myself, thought we would get this significant of a move at this point in time, but we have to fill this gap and then continue higher. And if we take out this A wave and wave 5, we could have this complex wave 5 where the C wave extension in the zigzag goes at least to that 615 level. That would move the wave 5 over, and then we'll see if we get in a further extended wave 5 up to 630. So that'll be the stuff that we're looking at over the next trading day or two, with a lot of importance on where we close today. It would be pretty telling if we closed on the high yesterday and turn around and close on the high again today. That would give you a little bit of an insight that perhaps we're moving higher from here. But if we give some of this back this afternoon before the close, then it leaves both scenarios in place as far as the potential for this just being an oversold bounce and moving back down. I think it warrants looking at volume because you can see, well, we had such a significant downward move yesterday with good volume. And so far, we're not closed yet. So a lot of orders come in the last hour. That's when the professionals trade. So that's when the heavier volume comes in. So the fact that we've got a low green bar here is not telling just yet that, oh, yeah, well, we got a bounce, but it was on no volume. We don't know that for sure yet, but that is something that we'll watch to see how much further back we can go. But it did yield some opportunities on some stocks that got really crushed, more than probably what they were due yesterday. And Nvidia is one of them. And I'll just go ahead and give you a heads up that will be our case study consideration for today. The last couple of weeks, we have just done posts, which were just thoughts, not really quote tradable ideas, but we will be doing Nvidia as an idea. This week, Zach will come in at the end of the hour and show you how to post that and a little bit about the social media aspect of the software platform. So it's more than just free Elliott Wave. You get free social media as well, and you can interact with others, as y'all like to do here in TradeFinder. Love this TradeFinder group that joins us because y'all ask great questions, and we'll get to the Q&A a little bit later on. So we'll keep an eye on this. I said we would go ahead and take a look at the 3-minute chart on the S&P. So let's see what's going on intraday, and there you go. Hopefully by now, those of you who've been watching notice that, oh, we had a move up, looked like an impulse, and then a corrective move, and then another move up. Sounds like a zigzag. Well, let's measure it and see. And so we start where we found the low this morning, right after we opened, and then down here. So we're right at the 38.2% B wave correction, which yields that 61.8% extension. So it looks like, at least for this afternoon, the early part of the afternoon, we're likely to climb up to 605. Then we have to wait and see from there if we get an extended move. If we look at the DMI, which also works intraday, you can see that the ADX is moving up. We have had a little bit of a move down in the positive directional indicator, a little bit of move up in the negative directional indicator. So some sellers are trying to come in and say, hey, can we catch this bounce and push things back to the downside? So that's the battle that's going on right now. Right now, the buyers are winning, but that could all change, which is one of the reasons that I really like looking at all this stuff on an intraday basis. Pardon me. So you can see here it says we're not showing an Elliott Wave pattern yet because we don't have enough data. So you just condense the chart until you bring in enough bars. Every one of those bars counts as a data point. So it's whether or not you're looking at apologize again. Whether or not you're looking at 377 bars, 3-minute bars, or 377 daily bars. Every bar counts as one of those data points. So you can see that phrase that there wasn't enough data has gone away, and yet there's still no 5-wave labeling, which tells us that there's no current 5-wave pattern on the intraday chart. So we are just going to follow along with this zigzag pattern. If there's not a 5-wave pattern, and there's not always a 5-wave pattern, if you're newer to Elliott Wave, if there's not a 5-wave pattern, you're in a corrective mode, which could be a flat, a zigzag, or a triangle. Those are the three things that can occur if there's no 5-wave pattern illustrated. So that's where we are on the intraday chart, and we'll see if we get to that 605 level before the hour ends. And now remember, or the software remembers, that when you do stuff like that, it brings it over to the daily chart as well. That's getting a little convoluted, but we'll go ahead and leave it there just so that I can click back to the 3-minute chart here in a little bit and get an idea of whether or not we can make it up to that 605 level. Let's take a look at some of the other markets. But before we do, I think that we need to look at the bond market. That's been the fly in the ointment with this big move down in prices and tick up in yields. Problematic for especially the tech stocks. Didn't help yesterday that we had a move up in prices and therefore down in yields yesterday. It was just all this concern about DeepSeek that came out over the weekend. If you're not familiar with it, it's a Chinese version of AI. They built it for $5 or $6 million instead of the tens of millions of dollars that they're talking about building AI systems over here in the U.S. So that sent some shockwaves through the market. In addition, we had all these threats of tariffs from President Trump over the weekend, from planes that weren't allowing landings with immigrants that are here illegally that are being sent back. Some of that got resolved, but then President Trump was back out this morning saying, yeah, no, we're still going to do tariffs. I think the interesting thing, though, is that he has not put on anywhere near the size of the tariffs that he talked about during the run up to the election, during the campaign. However, the new Treasury Secretary that got approved yesterday, I believe, has said that he's a fan of tariffs and that tariffs should be slow and added incrementally. And maybe that's the market likes that better than slapping these big tariffs on China or whatever in the meantime. So a little bit of a tick back down in price on TLT today. So that little bit of a tick down is brought rates just slightly higher today, but again, not affecting the rally. So yesterday's move up in prices and down in yields didn't help as far as averting the sell-off, and a little bit of a tick down is not hurting as far as the equities bouncing today. These will get in line. The bond market and the equities market will get in line at some point, but for now, we're still bouncing to the upside in general on prices on TLT. Maybe the market is taking solace in that we didn't get more of a bounce back down. I think we have to watch this 100% extension. It's a classic 5-wave pattern on TLT where we had the wave 4 go to 54%. So call it the 50% level that yields 100% extension. It's exactly what we got. We went to 161.8% on this zigzag that was back in the wave 3. So that level acted as an additional layer of support in addition to the wave 5 going 100%. We had the C wave of that zigzag going 161.8. So it was a pretty logical point to get a little bit of a bounce. And now we're going through some consolidation. So where do we go from here? Do we continue back up in price and therefore down in yields? That could be helpful to the equities market. Or do we roll back over and come back down and create a lower low on TLT? For now, the fact that we're back above the 10-day moving average, we want to see if we can continue this bounce back to the upside. The interesting question here is when you get to Elliott Wave rules. If you have a wave 5 that doesn't extend 100%, you know that the correction goes back to the previous 4. if the wave 5 extends more than 100%, you don't go all the way back to the previous 4. You just bounce back up 61.8 to that fib level. Well, we're right on the 100% level on the wave 5 extension. So that brings a little bit of potential question in mind as far as if we continue this bounce up in prices on TLT, how far do we go? Do we stop at 61.8? Do we go all the way to the previous 4? Difficult to know because we're just really right on that defining line. So I find that particularly interesting. Let's take a look at the Dow, the DIA, and we can see that we are getting a little bit better move in the Dow than we are in the S&P. We're almost ready to take out the new high, although if we go back to the S&P, we had already taken out the wave 3 high on the S&P. We hadn't done that yet on the Dow. So the Dow acting arguably better than the S&P, even though we haven't taken out this wave 3 high. We're starting to get just a little extended on this high away from the 10-day moving average. And I note that because as a reminder, for those of you that may be new or those of you that have been watching before, you don't want to break a point of resistance, support, break out of a triangle, break major moving averages, any of those things when you're already overbought. And the reason for that is it tends to not hold. So since we're a little overbought on the Dow, if we break above that wave 3 high and continue much higher in a little bit more of a vertical ascension here, the fact that we're overbought would likely bring a little bit more of a correction in the DIA. So what would be ideal if you like to trade the Dow is for us just to consolidate right here for a day or two. Let's go sideways, let the 10-day moving average catch up, catch our breath, build a little bit more momentum and energy, and then break above that wave 3 high. And then we have a better chance of having a wave 5 extension rather than just an overbought condition that gets sold into and we correct back down. Taking a look at the VIX, even though as ugly as things were yesterday, and we did have a pretty good bar on the VIX, the high of the day got up to 22.5, didn't stay there. You can see where we closed way down here yesterday. So all the way up to 22.5, only to come down and close at 17.5. That was probably an early precursor yesterday for the fact that we're likely to get a bounce today, with the fact that we came off of those highs on the VIX. And now we have this gap here, and it works the same way. Gaps in the VIX work just like they do on normal equities. Do we make a move back down to 15? That would coincide with a further move up in the equities market. So more stuff that we'll be looking at throughout the next day or two. Looking at the Qs, we had this movement down yesterday. Obviously, very much affected with Nvidia and others with this big move lower. Pretty nice bounce up, but note, unlike the S&P, we haven't moved back above the 10-day moving average yet on this bounce today. It's still a pretty nice bounce in the Qs, but we got a ways to go, and there are those 3 bars kind of floating out on their own, the potential for the island reversal, but we held support at 510, which is key. So we had this breakout, move back down, and now we're back up to the 10-day moving average with this wave 4 still colored green. So the algorithm is not quite sure this wave 4 is done yet. So it's leaving open the possibility that we could come back down and make a new low in the Qs. But certainly bouncing off the 38.2% level is a pretty strong fib level. So if we can hold this level right here around the 510 area and close higher today, and in the next day or two come up and fill this gap, maybe we can get some continuation out of the Qs. But unlike the Dow, that's a tiny bit overbought, the Qs are not. They're right on the 10-day moving average. So perhaps this oversold tech wreck, as they like to say on the financial media outlets from yesterday, could continue as far as a rally back, even if it's only to fill the gap. So maybe we get a little bit more out of this rally, and then we have to wait and see if we do have enough momentum to not only take out the highs of these 3 bars, but the high of the previous wave 3. So lots of stuff to be talking about there. Let's look at the IWM. Small caps, which have kind of diversed from interest rates over the past couple of days, but not significantly so. Hanging around this 225 level. So we came down here, barely stayed qualified on the wave 4, above 78.6, moved back to the upside. All 3 major moving averages, basically exactly where we are right now on the IWM. Most people, including myself, believe that small caps are very interest rate sensitive, even though I said they've kind of diversed from the bond market over the past couple of trading days. Not significantly so. We're right here where all these moving averages are converging, and we kind of want to wait and see if we can get above 230, if we can break above this resistance line here on the IWM, then perhaps we are good to go in the wave 5, because there's not much to stop the IWM if we break above 230. That move down in this wave 3 to 4 was pretty just stair-stepping down, which leaves not a lot of resistance to the upside if we can break back above 230. So we get back above 230, highly likely that we're going to at least test that wave 3 high. But we have to do it first, and you can see where we are. We're not really that close yet. We're at 226. So we've got some work to do here on the IWM before we start talking about breaking out of that 230 level. So that's something we'll be watching over the next couple of days as well. Let's look at the dollar real quick, which has given a little bit of a break here as we've come back down right to the 50-day moving average here. As you know, the dollar was getting a little high for me. I think that's going to really hurt companies. It hasn't really. I thought we might hear some job owning about it in the earnings cycle that's really gotten going over the last week or two, but not too much the conversation yet. This big rise in the dollar kind of occurred at the end of the last quarter, and so maybe not too much of an effect. But unless the dollar can turn and continue back down, and I'd love to see it get all the way back down to 104, but if we can't do that, I do think in the next earnings cycle, you'll be hearing a lot of companies talking about the exchange rate and how that's affected their bottom line, because it goes right to margins, et cetera. But a little bit of a reprieve here. We'll see if we can get some follow through to the downside on the dollar to help out. But if we turn and head back higher, and we may not, because that wave 5 is absolutely smack in the middle of the tap box. So we're just dead in the middle there. That could be the end of the ascent in the dollar. And as we move back down, if we can do it rather quickly, maybe we can offset some of that. We'll still hear it when we get the quarterly reports, but maybe it won't be quite as severe. And companies can say, oh, we're looking for that to reverse in the next quarter if the dollar has come back down. So a little bit of a question mark still on how the dollar is going to affect earnings in the next quarter. And the next couple of weeks within the dollar are going to help tell us a lot about that. Let's take a look at the metals. Gold is catching a bid back again today. We ran all the way up to the 100% extension. We had this as a strangle in our volatility portfolio at ewotrader.com. And at least for now, looks like we took it off in an ideal spot when we hit that previous wave 5 high. Yesterday, we looked like heroes moving back down, but today we're turning to head back up. So maybe gold isn't done yet. Maybe we just needed to come back to that 10-day moving average. We'd gotten just a touch oversold on the high. Another reason that we went ahead and took that strangle off. Had a nice little gain there. And now we'll watch and see if GLD can take out this 100% extension, take out this previous wave 5. And then it's going to be really interesting to see how the Elliott Wave labeling goes. Would this 5 move over? It could, because it's still in the tap box. Or is this a completely new impulse pattern that we're creating here? You would kind of lean that way because this looks like a wave 5 that completed here. When you complete a wave 5, you go into a corrective mode, a flat zigzag or triangle. There's your triangle that we had, and then the turn and move back to the upside. So it seems as though that whole entire scenario is complete with that wave 5 correcting into a symmetrical triangle, and that this would likely be the start of a new impulse pattern. If it is, we should get a little bit more of a correction than what we've had so far. But we're still in the A wave. And that's the one thing when people say that don't trade the wave 3 because it's hard to know where the wave 3 is going to end. You've heard me talk about this numerous times. I really like trading zigzags within the wave 3 because it does give you a target on where things could end. But the A wave is very difficult in any zigzag, flat, or triangle to determine what happens next, where it ends. Once it makes its pivotal point, then we have a much better idea. But until the actual wave A ends, it's hard to know. Every 5-wave pattern starts with a zigzag. So is this a wave 1 and potentially correcting down? We don't know yet, but it'll be interesting to see how it plays out. Going to silver, which is just not kept up with gold, even today, that we're having a little bit of an upward move, but nothing significant. We're starting to build a little bit of a resistance line here at 28. As you can see, we had some congestion through here. I call it congestion when you trade through the price level. If you bounce off the price level exactly like we did here, you call that support. But then when you come and you trade down through that line, bounce up, you come down and trade through it again, bounce up, trade through it again, that starts to become congestion as you have price levels trading above and below that level. It's not purely support if you're trading through it like that, but yet it still creates resistance for potential upward move. So we'll have to wait and see if SLV can get above 28. If it can, we might have something going. But really interesting that silver has lagged so much. We know silver can play catch up rather quickly when it wants to. Just go back and look at October when we had the same scenario and silver got on its horse and moved pretty quickly. So we'll see if we can manufacture that kind of a move again. But we got to get above 28 first before we can do that. So silver horse analogy, kudos to anybody that knows what movie or old TV show that reference came from. But let's move into taking a look at energy, and just can't hold a bid in natural gas, just can't do it. There was chatter this morning, interestingly enough, about the amount of supply, and then we just have an overwhelming supply of natural gas here in the U.S. Everything in the end in the markets comes to supply and demand, and perhaps there's just too much supply. Even though I do feel like the winter has been a little more severe in some areas that early forecasts, Farmer's Almanac, etc., we're calling for mild winter in some areas. I think it's been a little bit more severe when you get snow in New Orleans and Florida. Don't think that that's what was calculated in there. With some areas are going to have a milder winter. Where? Miami? Doesn't leave much left when you come all the way down into Florida and New Orleans as far as who's not getting a severe winter. So natural gas back down to the 50-day moving average. The algorithm unsure the wave 3 is over, but I wouldn't be surprised to see this get labeled as a wave 4 here pretty soon. And then maybe we can get a wave 5 higher, or maybe the fact that this has still stayed as a unsure wave 3, that the entire pattern relabels. That's still a possibility. So we're back just when we were thinking maybe we have something going here in natural gas. We're back into just wait and see, sit on your hands, wait for a more defined pattern to give us an entry. Oil has pulled back a bit. That's helping as well. Also kind of along the lines of what I thought was going to happen in oil. Talked about this in ad nauseum, talked about it in the U.S. market update over the weekend. It went higher than I thought. I thought we'd stay around 80. We got to 85, but we've immediately come back down below 80. And I just think somewhere in this big range is where we're going to be. on oil. OPEC's come out and said it. The drill, baby, drill. They even use that language that President Trump has been talking about. Go ahead. We're just going to cut production with whatever you increase in production. That's kind of what I've been talking about for a while. I figured that's what OPEC would do. They do want to keep the price of oil, therefore gas, elevated, but they don't want it to get to the point where it starts to affect driving habits. So I think they're happy to see it come back down just a little bit, but they want it to stay in a range in an elevated space, not extremely high, but in an elevated space, so they can generate more money out of it. So you can see that we had an open higher on oil this morning, and now we're back down right where we closed yesterday. Perhaps the next stop is the 50-day moving average here, and then we'll wait and see. But I think that move was vertical. It came from the breakout of the triangle, and you know what happens after a corrective triangle finishes this breakout through Elliott Wave rules. You come back to the point of the triangle breakout. We don't know when that's going to happen. It's the same thing with gaps. It could happen quickly. It could take a while. But perhaps the move intended on USO is back down to 72.5, which would be the point of that triangle breakout. Maybe that's what's underway now. If we bounce, then you could see where, well, that's an A and that's a B, and then we would have a C wave extension, which would imply a new high in oil above this wave 3. And if we hold here and bounce, that's certainly a scenario we'd have to take a look at. So kind of a little unclear on where we go with oil from here. Just feels like if we're going to get this close to the 50-day moving average, we at least come down to there. But if we bounce off that and head higher, we do have to respect the possibility that this is a zigzag pattern here to the upside. And just to show you where the levels would be right now, and I'm just speculating because we don't know yet. We need the bounce, but you can see that we're right at the 61.8% level there on the B wave, which would yield an extension up to 100%, almost to 90 on USO. Nobody wants to see that unless you drive an EV, and then you just be laughing and say, ha, made the right move. But you're still driving traditional cars, combustion engines, then you don't want to see USO head back up to 90. So I'm going to take this off. We don't know yet, but it is interesting that we kind of stopped this downward move right around the 61.8% level. So too early to call it, but certainly something to keep an eye on over the next few trading days on USO, whether or not we bounce from either this area or the 50-day moving average. Let's move over into crypto land. Bitcoin had a short-term move lower yesterday, as it seemed like anything with a risk appetite was getting sold off yesterday morning, cryptos included. We came down to the 50-day moving average, bounced back up. I know everyone that says, oh, no, Bitcoin trades 24/7, but it does have a calendar rollover where using end-of-day softwares like this, even though we can go intraday as well, can give you charting to look at with intraday, or excuse me, end-of-day type rules. So trading right at the 10-day moving average, kind of key that we held that 50-day and were able to close back above 100,000, trading at 102, call it 860 right now. So holding in there pretty well, all in all, as long as we stay above 100,000. That's going to be the key on Bitcoin, trying to hold above that 100,000 level. Ethereum looked like it was going to break to the downside yesterday, but it didn't. It held it, moved back up within the triangle. You can see the wave 4 was right at 61.8%, but remember the rules, because we have such a nicely formed descending triangle here. Even Elliott, if he was here, would say, don't get caught thinking that Ethereum's going up. It may break to the upside out of this triangle, but it could just as easily break lower. Any triangle can break either direction, even though you have a wave 4 right there at 61.8, which is a pretty strong fib level, the strongest of all fib levels, in my opinion. We still got to make a bigger move here on Ethereum before we can say, yeah, we're in the wave 5. We still have to respect that out of this triangle, we could break either direction on Ethereum. Taking a look at ADA, also at one point yesterday was getting sold off with everything risk minded. A little bit move back to the upside today, but just kind of status quo. We're really just kind of hanging around that dollar range. And for Cardano, with this move from 25 cents to $1.25, if you're long this, you're probably pretty content with how you've held in there so far. And then XRP, which again, with everything, had a pretty good low, jump back up, and you can see we're right in the point of the triangle here. Is this a false breakout? Is that the end of the breakout? If we measure the mouth of the wedge, so we're like from 275 to 325, so call that a 50-cent move. And then if the midpoint is maybe 310, we came down here to 260, 50-cent move. So that applies to where on the low of the day, it's satisfied the breakout. You measure the mouth of the triangle, and the price level low to the price level high is the percentage or the price movement that you're expecting from the point of the triangle. And technically, we did that on the low yesterday, and we're already back to the point. So we could have finished this downward breakout and already come back to test it. And maybe that's the end of the downward move in XRP. So once again, we'll keep an eye on where things go. Even though you talk to crypto people and they tell you that not really so susceptible to what goes on in the equities or bond market, but little bit associated with the tolerance for risk in the market. So if we have a high risk tolerance, then the cryptos tend to do well. And if we feel like we're in a risk off, we tend to get a little bit of a backup in the crypto land. So from that standpoint, they do seem to follow a bit, but perhaps not all the way. Let's look at some international markets. We'll take a look at EWA. And from there, you can see that we have this wave 4 labeled right at 50%. Ticking back down, holding the 10-day moving average for now. We'll see what happens when their market opens today. But even on the low, held that 10-day moving average. When you look at this 5-wave pattern, gosh, it's awfully well set up. If we are going to get a continued move up in the metals, it seems that we would still have some ties here to the resources from Australia, and perhaps we can take out this wave 4. But as long as it's this well set up, we still have to respect the possibility that we could head lower here. Does that mean that maybe gold is done to the upside? We're not going to take out that previous high, and we're going to head lower here on the EWA. Have to wait and see how all that ends up. Moving to Canada for the EWC, who's very concerned about tariffs, at least from what they're stating that they are, but hanging in there pretty well on the price movement. Have to wonder, are we going to go up and fill this gap right here first? And then we'll figure out where we go from there on the EWC. But for now, it seems like a drift up towards that 42 level is warranted. If we were to close here, we would close on a doji. But again, we got over 2 hours before the market closes, and anything could change throughout that time frame. But for now, a pretty nice little bounce in the EWC. Once we fill this gap, we have to see if that's all it was and we roll over and head back down, or was this the end of the selling and we turn and move back to the upside. It can be really interesting to see what happens there. And then the EWG, that not only us here, but on the financial networks are talking a lot about this, because nobody seems to really understand what's going on over in Germany. Their economic numbers aren't that good. Their central bank is a little ahead of the U.S. as far as cutting. Maybe that's all it takes. But across the pond, as they say, they're very concerned about any potential tariffs coming their way. It just seems odd that we got such a strong vertical breakout on the EWG, and at least at this point, it's holding it pretty well. For me, it's too vertical. It's too far from the 10-day moving average, so I'd be concerned about a move back down, at least to the 10-day moving average there on the EWG. It may not do it. It may consolidate sideways, but that would be the exception rather than the rule. The rule would be likely some backing and filling here, maybe back down towards this 10-day moving average. Let's look at FXI. There was some positive data released out of China last night, but hasn't seemed to help the FXI today. We did get a little bit above the 10-day moving average on yesterday's high. We do appear to be breaking out of this big descending triangle. And honestly, if you break out, come back and test the breakout, and then take off, that tends to hold pretty well on the breakout move. But for now, we just have to wait and see. We are above the 10, 30, and 50-day moving averages, and we've had a bullish 1030 cross. So maybe this just is a short-term overbought rest that's occurring on FXI. And then INDA, which we've talked about quite a bit lately because of its downward move, the fact that it had a wave 5 relabeled to a 3 on the downside. We said it seemed like we were marching down towards this 100% extension here on the C wave. We've almost made it. We're almost there. So at some point, you have to look for a wave 4 bounce here on the INDA or the Nifty, whichever you're trading as far as the market in India. But for now, we just look to see if we hit that 100% extension, where do we go from here? Is that the end of the wave 3? Could be, because I really like the zigzags within the wave 3, as you know, or we could still head lower. Note that wave 3 is colored green, so it's still unsure, the algorithm on what's going to occur here on the INDA. All right, so that covers off a lot of what we talk about each and every week. I do want to take a look at the chart of both Apple and Nvidia. I think they're both quite interesting. When you see Apple, if it was going to bounce, it was at a logical place to bounce. That's had 2 pretty good days. You can see we're off the high here, but we are getting follow through yesterday where we were able to close just right at that 10-day moving average. So we needed to see if we'd get follow through today. And so far we have. The 220 level being such a strong area of support. I don't know if Apple's doing any stock buybacks. I've always talked about how shorting Apple is one of the hardest stocks to short in the market, I think, because they have so much cash and they just will willy-nilly come in and buy more shares whenever they think the stock's undervalued. So holding 220 and bouncing, I think, was key. So I don't really think this is Apple in the markets buying more shares, but the strength of the 2 days could be, or it could just be simply market rotation. You can see yesterday's move was on solid, but not extreme volume, not even as high as where we got towards the end of December. And that's really key when we start talking about volume in these moves, because when you get a big bar like this on huge volume, it tells you that's kind of the FOMO. People are like, oh man, Apple going to the moon. I hate using that. Shouldn't even have said that. Terrible meme and comment. I just think that's the silliest thing ever. But the fact that we had this big move on big volume tells you that this was running out of gas. So the fear of missing out, people wanted to get into Apple, and then you get the correction, and they released about every piece of negative news that they could on Apple, pushed it all the way back down to support there at 220. And now we'll see, can we hold this break above the 50-day moving average today? You can see we hit the 10-day moving average on the low of the day and a close back above the 50-day moving average, and bringing volume up somewhere in the area of where we were yesterday would be pretty telling and give you an idea that we're likely to move higher in Apple as well. But the chart of Nvidia, talk about feeling like a stock is oversold. You saw all the numbers yesterday, worst day history, all that kind of stuff. And you can see the incredible amount of volume where people just bailed left and right. So when you get that, when you get a sell-off where you finish near the low of the day on massive volume, it's like all the people that wanted to sell or were concerned about selling and thinking about taking profits, whatever the analysis was, did it yesterday. And that leaves you some room for an upside bounce. Now, notice that pretty decent volume so far on the bounce back up in Nvidia. So that's what our idea is. We've created a wave for right around the 61.8% level. We're still below the 10-day moving average. Not trying to say that we're out of the woods, everything's good to go, off and running in Nvidia. What we're talking about middle area here, see in that congestion up near 140. If we are coming back up to test that, or was this just a really quick wave for? Notice that moving back up towards that 140 level would fill the gap as well. The negative here is that we've had a bearish 1030 cross, but you can see since, going back into November, we didn't quite cross there. We kissed, but we did cross to the downside in December, back up the end of December, back down in January. So we've been, I call that snaking. Some people just say whipsawing, but where the two lines cross and then recross, and then it looks like the pattern that a snake makes in the sand as the two lines keep crossing back and forth. So a little bit of uncertainty as far as where things go, but just felt like yesterday's selling was a little overdone, and that will at least come back up to that 10-day moving average, perhaps fill that gap, and then we'll see. Not trying to say that we're in the wave 5, we're off and running, and Nvidia's going back above 150 and back to the wave 5 target, which could bring it between 150 and 190. There's a tap box, but notice how far out in time it is. So this, what we're looking at here, is just an oversold bounce trade, too far from the 10-day moving average. And if you're new and haven't heard me talk about those before, when we look for these oversold bounce, overbought selling, etc., it's a 1 to 3 day trade. So it's a very short-term trade, just trying to correct the overbought or oversold condition, and then you get out. Not trying to suggest, again, in any way, shape, or form that that wave 4 is done and that we're off and running in the wave 5. We might be, but I'm just not suggesting that, and that's not the purpose of this post that we're going to do today, the idea that we're going to post. So, Zach, I'll take a few questions if we have some before you come in and show the folks how to post that.
Sounds like a plan. Got a question here from Tuco, which you already covered on Apple. So let's look at XLU, new to Hub, and trying to figure out the ABC waves on the daily.
Yeah, if you've noticed, I take them off. I don't have the pre-computed ABCs. I just find that you get a lot of lines, and the algorithm is trying to calculate, okay, which corrective pattern is this? Is it a flat, zigzag, or triangle? I'm not a big fan of trading flats. So because of that, I just don't even have those ABCs turned on. If you want to know how to do that, you can go up here to plots where it says Elliott Wave. If you're new, you can go over here to appearance, and there's where the ABC points are. Notice that box is not checked, so I don't have them on. So you can just uncheck that box and save it as your default if you don't want those on there. They also have signals here called EBOTs. That stands for Elliott Breakout Trigger, which can give you an idea of when a wave 3, 4, or 5 might be done as well. If you cross those lines, it just puts a lot of stuff on the charts, which some people really like. Some people have so many lines on their charts, I don't even know how they see what the chart pattern is. I'm the opposite. I like clean charts to where I can identify what the pattern might be. So when we're looking at the XLU, we do have the potential for this to be a downward zigzag. So I prefer just to draw it myself using the zigzag tool. rather than having. But if you like having it done for you, that's fine as well, especially until you start to get the hang of these corrective patterns and feel more comfortable drawing them yourself. Go ahead and let the software do it for you. But we're right here at a 69% B wave correction. It's a little elevated, but below 78.6. We drop back down in utilities, and if we're going to get the bond market to cooperate and we're going to get rates to go down, and we see a resurgence in the big tech stocks like Nvidia and Apple, et cetera, then perhaps the more defensive XLU loses buying interest and we start to drift back down in this C wave. But we have to break below 75 first, in my opinion, even though it does look like it's a pretty decent setup there for a downward zigzag. I think we need to come and break this 75 barrier here. If we do, then I think it's pretty safe to say, yeah, we're probably going down to 71 or so on the XLU. I don't think we can say that yet, but the negatives are it's a decently set up zigzag pattern. The symmetry is good, which I like symmetry in the zigzags where the angles are similar. We're below the 10-day moving average. The 10's crossed below the 30. So there are a lot of negatives here on this chart. But to feel more confident that we are actually in the C wave of a downward zigzag, you'd want to break below 75.
Very well. Thanks, Rob. Next question we have is from Francisco, wondering where the hat is. We haven't seen Trader Chuck in a while.
Well, you didn't look at the U.S. market update over the weekend then, because I wear it every time we do that. And I probably should start wearing it during TradeFinder as well, since you guys are very similar audience to the two. But yeah, I kind of use that as our shtick for the U.S. market updates. But I've come to like the hat quite a bit. So it hides more of my face too, so that's a good thing.
No, just throwing some humor in there. Bruce would like your thoughts on Wolf, WOLF.
That's one we haven't looked at for a while. So let's see what old Wolf Speed has going on. Trying to find a bottom here. Now, if you're familiar with this, bear with me. If you're not, I wanted to talk real quickly about the price levels, $5 and $10. If a stock breaks below $10 and it's above $5, then institutions, investment companies, et cetera, that have aggressive growth as their investment objective, they're registered that way, they can own stocks above $5. If it gets above $10, then any investment company with an investment objective or of growth or more can own those. So it does limit the amount of institutions that can own a stock that's under $10. And it significantly reduces it if it drops below 5. And then stocks get in danger of moving back to the pink sheets as penny stocks if you start to drift down towards that dollar level. You can see on the wave 5, we came down, we got into the tap box, we had a 70% extension, we bounced up, and we've gone dead sideways here with the 10-day moving average. So it's trying desperately to hold here above this $5 level. And if it can do that, then it has a chance to garner more institutional buying and perhaps get back above 10. If it can get back above 10, you probably get another influx of volume from institutions, and you could run up to that previous wave 4 high. But for now, if we look at the volume, notice what happened here, which illustrates my point. As we started to look like we're going to break below 5, the institutions came in and bought. And they tend to do that. That's why it's important to watch these levels, because if you break below 5, and I used to know the time frame, but they change the rules all the time. I don't know the regulations exactly right now, but there's an amount of time that if it trades below 5, institutions, even with aggressive growth as their investment objective, have to sell. They don't want to do that because when you've had a stock that's come down like this, if they sell, then they have to take that loss. So it becomes an actual loss rather than a paper loss. So they don't want to do that if they don't have to. So what will tend to happen is they'll come in and buy and support it and see if they can generate a bit of a short covering rally. So that's exactly what happened here. You can see the big volume bars that got it back above 5, so safety for now. But they really would like to create more of a move to the upside to create a little bit more short covering and get that thing back up to 10. But if you're really aggressive minded, as long as you stay above 5, I think you could take a shot at this. But if it breaks back below 5 and they don't come in and support it, they'd have to take the realized loss. But I think that for now, from a purely risk standpoint, you've only got risk down to about $5, and if it broke that, you'd get out. So an aggressive, someone with aggressive tolerance and some speculative type money could take a shot at this.
Thanks, Rob. I do quickly want to give Manuel and Michael their credit for your movie trivia question on the Lone Ranger there. So props to them.
Yeah, very good. Yep.
Couple of symbols from Manuel. First one's going to be DHI.
Yeah, got a downgrade yesterday, which is kind of interesting with the fact that the home builders have hung in there pretty well. But some of the comments that were made with the downgrade, et cetera, is that builders are offering way too many incentives, which leads you to think that maybe we're in the early stages of we've got too much supply now. You know how it always works in real estate. When you go into a big buying mode and prices are inflated and they're going up, the builders build as fast as they can build. And eventually supply overtakes demand and prices have to start coming down. With the fact that they're having to offer so many incentives, buying down mortgage rates, et cetera, to get people to buy, is an early signal that maybe we're starting to get enough supply to meet the demand, and it's time for prices to start to come back down. That was some of the commentary on why the downgrade yesterday. However, notice that even with the downgrade, didn't really hurt the stock. It's had a pretty good move down already. And so with the selling pressure that's occurred already, they're like, whatever, downgrade, who cares? The wave 4 is still green. It hasn't gotten to 38.2 yet. It did get to 30. But right now, we just kind of have to wait and see. We're building a little bit, not the best formed, but a little bit of a symmetrical triangle here at this area, which means I think we're going to see a move. What would that be? About 135, about a 15-point move out of DHI. I can't tell you what direction that's going to be, though. You never know. But it could break 15 points to the upside and just move that 4 over to a higher 4, which I think could happen. Or we break down and it labels the 4 as, yeah, we're done. We're now in the wave 5. But I think from the upside here, based on where we are in the cycle for housing, et cetera, I think any sort of a breakout to the upside could be a shorting attempt here on DHI.
Quick thoughts on Palantir, PLTR. I got one more question for you, and we'll go over to the platform to post the idea.
All right. In PLTR, oops, I got to go to the new exchange. They switched exchanges. So pretty nice recovery. I showed that in the U.S. market update over the weekend. Pretty much everything tech got hit yesterday. But we had a doji, and we're back above the 10-day moving average. So it's no harm, no foul with all yesterday's stuff for Palantir. And the wave 3, they're not sure. The algorithm's not quite sure it's done. But with the separation here from where the 4 is to the fact that we're about to take out this wave 3 high makes me think that 4 is probably done. Back above the 10-day moving average is key. We'd had a pretty nice run up here. So you could argue with the point that I made earlier that you don't want to break a major point of resistance when you're already overbought. So yesterday's sell-off and today's recovery is ideal. The only thing negative to watch is the fact that, okay, we filled the gap. Is that it? Is that all this is doing? Is we just filled the gap and then we roll over and head lower? I would want to see to go long Palantir. If you're already long, there's no reason to get out. I don't see anything at this point that would say get out. But if you're looking to go long, let it get above 80 first. We're that close. We're at 78.5. Let it break above 80. And if it looks to have some follow through, it could be off and running. Who knows where it goes on the wave 5 high. So, yeah.
All right. Last question I'll pass through to you is from Maria here. FTNT, thoughts on hitting the tap? ADX doesn't seem supportive of the up move. Thanks.
Sure. Let's take a look. Having a nice day today. Not quite up to the tap box yet. Some really nice consolidation. When you take a look at this, I don't like this stuff. This big vertical move, and this is why. When it goes vertically up, comes vertically back down. But it only came back down 40%. So that, in general is about average. So it's not anything significant. That's normal. And we came right back to the 10-day moving average. So all of you that make fun of me for stating that rule over and over and over again, I'm going to continue to do it because it's one of the best rules you can put in your trading toolbox. No security in any time frame gets too far from the 10-day moving average. It just works. Use it, get good at it, understand it, get a feel for it on any individual stocks that you look at, because that rule works. And so we came back to the 10-day moving average, and now we've just been trading along with it. So the question was on the ADX, so let's add that in. You're right. The ADX is moving lower. However, we've been going sideways since November. So I think it's actually a pretty good thing that the ADX has dropped down. So what I like is when you have a move like this, where the ADX broke above, got up to 40, went sideways for a while, off of that big vertical move, and we've gone sideways. The fact that the ADX has come down gives it a chance now to turn and go back up, because sometimes you'll have these ADXs that go above 40, they come back down, they don't make it back down to 25. I prefer it to come back to 20, but they don't even make it back down to 25, and they turn and go back up, and there's just not enough strength left, and then that second attempt tends to fail. But when you come all the way down back here, it's like starting over again. It's like, all right, let's go back to the starting blocks, and then perhaps we can turn and go back up. So I think it's a little early on this, Maria, to judge it from the ADX. If we can continue to move higher and break above that 100 level, which you can see why we've had resistance here, hitting 100, that big round number, the tractor beam effect that we talk about. If we can break above that and get that ADX to turn back up and show some support, then yeah, I think you're headed to 110 in the middle of the tap box at least. But I actually think the fact that the ADX came down that far is a good thing. Again, giving it a chance to catch its breath and turn and move back to the upside. There's a better chance with the ADX coming down low like that to turn and move back up in a meaningful way than if it only came down a little bit and tried to turn back up. That has a higher percentage chance of failing. So good question. All right, Zach,
Already.
let's post Nvidia.
Yeah, no, we'll head over to the platform. I see we're a few minutes after time, so I won't spend too much more time. Just I'll show this is the menu jumping off point that you'll see upon entering your credentials into the Hub platform. We're going to go up to the light bulb here to post the idea. And as Rob mentioned, the past couple ones have been of a post, as the criteria was not fully met to be a legitimate idea that we're going to post today. So we're going to go to create idea. This one's going to be on Nvidia, so I'm going to search here in the symbol box. Looking for a target price of 140. Is that correct, Rob?
Let's do 138. Probably goes to 140 to 138.
138. And time frame on that?
Show them how to do 2 months on this one, because we're just looking for a quick oversold bounce.
Sure thing. So as Rob was alluding to, there's these fixed intervals of time for you to select that are preset for you. But if you need something more specific than that, you can go down to the very exact day that you are looking for. So we're going to go 2 months out. I always like to go to the next trading day. So we'll go 1, 2, and today's the 28th. So we will go to the Friday selected there. We will make this nice and pretty very shortly after this session, but I am going to go ahead and post it so we can allow you to go in and interact. Whether you agree or disagree, we welcome your opinion. Opposing opinions is what makes markets. Without that, there'd be no transaction. So, Rob, I'll pass back over to you to wrap things up. I do want to say to anyone that we didn't get to your questions today, we apologize. We will get to as many as we can next session. There was just lots to talk about today with the recovery. So.
Yeah, with all the news that occurred over the weekend, I might have got a little bit wordy and all that, but I do think it was important. Try to do my best to explain all this financial stuff in terms that the average person can understand, rather than all the rhetoric that they spout over the financial networks. So apologize if I got a little bit long-winded. Yeah, we'll get to more questions next week. But thanks as always for your attention. Thanks, Zach, for all your work behind the scenes. Interact with that social media aspect. It's fantastic. It's a great way to post ideas and hear what other people think. And if you read through them, you can see people are respectful. And I really like that about, you can have a disagreement without trashing somebody else's idea. You can just have a difference of opinion. And as Zach mentioned, that's what makes markets. That's the great thing about it. So utilize it. It's a great feature of the software. So thanks again for your attention. Have a great rest of your day. We'll see where things close today. Look forward to talking again soon. Take care, everybody.